In today's video, I'm going to share with you the 3 biggest 401k mistakes that will destroy your retirement if they're not properly addressed. The first biggest mistake, waiting too long to create a tax strategy. Most people are going to spend 30 to 40 years building up their 401k nest egg without ever asking one critical question. What happens when I go to pay taxes on all that money I've earned? Well, number one, you don't know what that tax bill is going to look like. But also, you have a partner in that 401k called the government, the IRS. And the longer you wait, the fewer options you have. You get to age 73, the government forces you into what's called required minimum distributions. Whether the market is up or down, your account's up or down, they force you into paying higher taxes into a higher tax bracket. It'll increase your Social Security, increase your Medicare premiums, and trigger taxes all across your retirement. People focus on growing the account, but in retirement, it's about how much we get to keep. So the biggest mistake is taking all the market risk near retirement. That's the second biggest mistake. Most Americans are still heavily exposed to market volatility right before retirement. That's extremely dangerous. If the market crashes 30 to 50% right before or during retirement, you don't just lose that money, you lose time, because now it's going to take time to build that back up. And if you're taking withdrawals during a downturn, it creates something devastating called the sequence of return risk. That simply means this, that your portfolio may never recover chasing these returns, trying to get back to where you were before you took the loss. If you look at what happened to people in 2008, they delayed retirement. Many of them went back to work that were retired. They reduced their lifestyles dramatically. So the closer you are to retirement, the more dangerous volatility becomes. You can't afford a major loss at the wrong time. It could cost you everything. The third biggest mistake is believing these average returns we've seen over the last 17 years are still going to happen. This is one of the biggest lies in retirement planning that I hear all the time. People are told the market average is 10%. Just leave it in there. You're going to be fine. But the averages, they ignore 3 big bugaboos called taxes, fees, and inflation. And then you lose money at the wrong time. Man, it's devastating. Inflation, if it keeps at 6%, we got to double our income every 12 years to have the same buying power we have today. So your statement may be growing, but your lifestyle shrinking if you're not addressing all 3 of these. And the real question is, how much money do you have? The real question is, how much money will you be able to keep after taxes, inflation, fees, and market losses? That's why the wealthy, they don't just focus on returns. Yeah, that's important, but they focus on strategies, protection, keeping more of what they've earned. If your retirement plan doesn't address all 3 of these, meaning taxes, inflation, and market volatility, you don't really have a retirement strategy. You're exposed. And getting unexposed is one of the most important things that we help you do. Click the link below. I've got a free ebook that I've just dropped called The Retirement Reckoning. It's loaded with great information and insight. Don't forget to subscribe and follow the channel here. We do Truck Talk financial reports as well. It's all about educating and empowering you and helping you take back control of your money. Live with passion and purpose. Make it a great day.